Maudi, a very good evening to you. Thank you for coming in. So, for those of us who don't usually track economic news at this level, put in context the magnitude of this moment.
Sure. Tembegile, I mean, the last time I saw this movie was probably in 2008, during that financial crisis where it was just a blow of one crisis after another. This time, obviously started with the crisis that we have, the pandemic that we have. I mean, it's spreading like wildfire, and I think very soon, if the rate of infection does not stop, it will be declared a pandemic. It's just a matter of time. At the rate it's going, it's certainly unstoppable, and there seems to be a lot of challenges, with some countries already. So this is the beginning of it. Now you've got the oil, war that's taking place between Saudi Arabia and the OPEC members and Russia. So that's adding to more pressure. So while we were dealing with the coronavirus, and we thought perhaps, we can navigate that part, there's another double blow. So I think it's going to be a very, very difficult period. It's a matter of, can we resolve these problems? I think we can probably maybe resolve the coronavirus, maybe two months down the line. Can the oil market sort itself out? I think there's a problem there that's going to be prolonged for some times to come.
And on that point, I want to come in then, because the global coronavirus outbreak affecting China, affecting the United States and much of Europe, at this point, we also have 7 cases. But a lot of it is an external factor when you look at the impact financially, right? You've got the oil war essentially between Saudi, the Russians, and the other OPEC members involved. Given just how external all of this is there anything that South Africa can do at this point, or is our best bet to just sit back and wait it out?
Yeah, so I mean, if you take the oil, the whole war around oil, there's not much South Africa can do. We are the net importer of oil. I think the benefits there is that in the short term we'll probably benefit from this oil decline. That's provided that we don't have the same kind of rand depreciation that will, of course, offset those benefits from a drop in the oil price. So the drop in the oil price is positive for South Africa. Does the rand also weakens with it? It's, if that happens, then it basically takes out all the benefits. The problem is our trading partners, when they're struggling, the likes of Nigeria, the likes of the US, the likes of Europe, of course, if they start struggling because of the lower, the crisis that will, of course, emanate from the oil market, we will also, of course, be affected. The whole global GDP will be affected. And therefore, we're not going to see much recession. If the global GDP start moving into recession, for example, the US, I mean, the US are so heavily invested, particularly in the oil market. Those shale producers in the US are going to come under severe pressure. With the prices at this level, the marginal cost of production is around $60 a barrel. Now, look at the price where it is now. So they're making massive losses. It's a matter of, does that then drive the global GDP into a recession? If it does, it will affect us negatively. But of course, if it doesn't, if they find a way to navigate and survive, I think it will be positive for the global economy, because the lower energy prices, it's a stimulant in itself for the global GDP.
So that's the recessionary concerns, if we can call it that. How great a risk are we in terms of a depression? Is that not on the cards?
Perhaps a depression will be a little bit more, harsh. It's very extreme. I think a recession, especially just given where we were in terms of the global GDP. I mean, just looking at the numbers that the US posted just last week, on Friday, solid sets of numbers. But of course, what transpired with the OPEC members, it makes a reverse, complete U-turn to where the US was going. It literally just puts them into an opposite direction with regards to their own oil market. And also, when you take coronavirus as well, remember the US, it's massive. It's big on the service industry. So if people start not traveling and going into restaurants and eating out because of this pandemic, that will be negative for the service industry, particularly the US economy, which is quite large in terms of the service industry. So that will be affected as well. So it makes just the complete reverse.
Something that we saw happen today, right in the middle of all of this global panic, the meltdown in the markets, was the New York Stock Exchange, rather, go into a temporary halt in trading.
Yes.
Is that a possibility for South Africa? And in what circumstances would we see a halt in trading?
Yeah, so halt in trading, it's a norm. It happens across many markets. Not to, obviously, regulators will have to stop, because otherwise that would be very catastrophic. They need to stop at a certain percentage. I think it's 5% limit down. They stop trading just to make sure that there is no panic, because once you go beyond a certain level, then you are inviting chaos. It's a norm across. Even the JSE has got limits in terms of what percentages we can. I just need to recall those numbers in terms of what percentage they are. But this is the regulatory thing that gets implemented when we've got days like these ones, where stock markets completely get, destroyed.
Would a rate cut by the Reserve Bank help with where we are? I mean, the Americans announced it, I think it was last week or the week prior, where they said to just try and boost the U.S. economy, given the impact of COVID-19, there is going to be this rate cut. Yeah,
look, I think it's a high possibility that definitely central banks are going to have to look at ways to stimulate the economy and just calm the things down. I think you're going to see now the central banks coming back again with that accommodative monetary stimulus. The problem is, and this is why the Fed has been trying to hike and normalize interest rates. The problem is they haven't moved into normalization, and now we've got another crisis, and which has been the biggest fear, that is the next crisis going to come at the time when the U.S. has still not normalized the interest rates, because they are sitting almost close to zero. And this is not only the U.S. If you look at across Europe, the interest rates are sitting almost close to zero. So there are room to maneuver. It's very limited. Of course, they can always come up with other unconventional ways to stimulate the economies, such as the quantitative easing. It's a possibility, but they are in a very difficult position in this crisis than they were with the crisis that happened in 2008.
Let me put you in a corner, perhaps, Maudi, and ask you this. Is the worst still to come?
Look, I think the worst is still to come. This crisis, especially with the OPEC, it has been coming, long coming. OPEC members have been losing market share. They've been worrying about that. That market shares, every single time they meet somewhere in Vienna to cut production, the U.S. shale producers have been ramping up production. The U.S. has moved from being the net importer of oil to being the net exporter. So they've taken over the market share. And I think OPEC members, it was just a matter of time, because they've been worried about this phenomenon. And I think this weekend, they just had to, say enough is enough.
It finally came to a head.
That's correct.
Economist Maudi Lunsana, always great to have you on Nightline. Thank you so much for coming in.
Thanks for having me.